Hooty hoo, welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the stock market today? Well, we're having a melt up. We're melting up towards the end of the year. They want to push this market higher. Dow's up about 270, Nasdaq's up about 200. Now, we had that down day yesterday, but we're bouncing right back. Now, I do think we're going to get a pullback here, and there's a couple reasons. I think we're going to get a little bit of a pullback. Number one, we're bouncing up against, on the S&P, we're right at the 20-week. The 20-week moving average, it's having trouble getting through that. It got rejected yesterday, and today we're bouncing right back up there again. I'm not sure we're going to break through. I think we're going to get a little bit of a pullback here. How low? That's a good question, maybe down to 4,200. But I do think they want to push this up into the end of the year. The other thing that's telling me we're going to get a bit of a pullback is the HYG, which is the junk bonds. The junk bonds are selling off, and that usually tells you the direction the stock market's going to head. So right now, the junk bonds rallied up. They're having a pullback. The stock market's rallied up. It should follow the junk bonds and have a little bit of a pullback. And I do think they'll push it up into the end of the year. Now, do I think the stock market is going to crash still? Yes, it's going to crash. It's just not going to crash this year. It's going to be pushed out to next year. I think next year is going to be the biggest crash of my lifetime. This is just my take, just my opinion. Yours may be completely different, and that's okay. That's just my take. Let's get over to the real estate market now. Real estate market, always fascinating. They always come out with these articles. Yahoo Finance loves to put these articles out. Okay, so here's the latest one. All right, rates plummet, and this has unleashed more home buyer demand. Okay, so let's talk about that a little bit. Now, rates have gone down. They've gone down from 8%. They're down to about 7.8. Now, I guess that could be considered a plummet. It's not even a quarter of a point, but it's gone down a little bit, right? Now, has this unleashed more home buyer demand? Now, it maybe if a quarter point's going to make a difference to you home buyers out there. If you buy or not, maybe you should not be buying. But they think that this has unleashed the demand. Now, I got news for you. This demand is dismal. It's dismal at best. But well, we got the deputy chief economist of the National Association of Realtors out there. Now, she goes by Dr. Jessica, and she says if the rates drop, we're going to see this huge demand for houses. Well, you see, my take is a little bit different than hers. First of all, if the rates drop, they're still unaffordable. People want to buy. There is demand, but they can't afford to buy until the houses drop a lot more. Now, I think that rates are actually going to go up from here. Now, you can call me crazy, but I actually think that mortgage rates are going to move much higher. I think they're going to pass the 10% level on mortgages. I think they're going to hit 12, 14%. Now, here's another prediction I got. You see, I don't think that inflation is dead. I don't think they've won the war against inflation. I think they've lost the war against inflation. Now, by the government statistics, they'll tell you inflation is down below 4%. But me and you, we know that's not true. If they measured inflation the way they did back in the 1980s, we'd still be up around 10%. And you're not going to fight that 10% inflation with a 5% interest rate. Now, the Fed has raised interest rates from 0 to 5%. Now, they're just waving the white flag right now because they can't raise them any higher because they've already broken the banks. They're crushing the middle class. They raise them any higher, they do bankrupt the federal government. The federal government is not able to afford to pay the interest rate on the interest alone on their debt, let alone pay off any of the debt. You see, they cannot raise rates higher. So inflation's going to win. So I think in 2024, you're going to see an inflation number that hits double digits, over 10%. We were at 9.3, came down here to 4%, but it's not over. Inflation comes in waves. The second wave is going to hit, and it's going to reach double digits. So I think we're going to see double digits on the mortgage rates in 2024. I think we're going to see double digits on the inflation in 2024. Now, this one, you're going to say, but Mike, you're really gone off the deep end on this one. Here's what I believe. I believe you're going to see double digit rate in the unemployment numbers. I think unemployment is going to go above 10% next year. Now, they're telling us right now unemployment rate is down under 4% also, just like inflation, under 4%. I'm not sure if I believe their unemployment number, but we'll go with their number. Let's call it 3.8 unemployment rate. In next year, 2024, this time next year, you're going to see that number in double digits, 10% or higher. Now, here's why. Okay, so you got all these, let's just call it zombie companies. Zombie companies are out there, right? And these zombie companies, they don't bring in enough cash flow. Don't bring in enough cash flow to pay off even the interest on their debt, right? They have all this debt and they don't bring in enough cash flow to pay the interest. Okay, kind of like our government, right? Okay, so our government's a zombie government, but these are zombie companies. That's what definition of zombie company. That doesn't bring enough money to pay the interest on its debt. So it has to borrow, right? Just to stay alive, it has to borrow. It has to borrow just to pay the interest on the debt, just like our government. Kind of weird, right? All right, so these zombie companies, a lot of them are going to be going bankrupt. They're going to go away. They're going to, look at zombie companies, when the rates were 0%, they could go out and they could get free money, basically free money from the Federal Reserve. Okay, so they were staying alive. And there's 20% of the companies out there right now are zombie companies. 20% of the companies in the S&P 500 cannot afford to pay the interest on their debt. So a lot of these companies are going to go away. Now, they're going to try to lower overhead first. Now, what does lowering overhead mean? To reduce their cost, right? Because they can't afford to operate. So how do they reduce their costs? Well, they lay people off. They have to. That's how they reduce their costs. So they're going to lay people off, right? That's going to be the first thing they're going to try. So that's going to spike up unemployment. When you got 20% of the companies laying people off, will spike the unemployment rate. But it's going to get worse than that, because you see, a lot of these companies are going to go out of business. They're going to go completely bankrupt. And then they lay everybody off. Everybody that's working at the company no longer has a job. Now, when you get 20% of companies in this situation, that's what we've created with this cheap money, with this free money, when they held interest rate at 0% for 14 years, right? Okay, so that's what they created. They created zombie companies. And so these zombie companies are going to get wiped out. They're just going to go away. And that's going to create this spike. And I mean a spike, a big spike in unemployment. This time next year, I'm predicting that we're going to have over 10% unemployment. All right, so what's that going to do for your houses? What's all that going to do? Mortgages, double digits, all right? That's going to be probably a bad thing for the housing market. Well, I would say it's going to be bad. Now, of course, a lot of people like Barbara Cochran out there should tell you that that's a good thing, because it's going to make people hold on to their homes more, less inventory on the market, and that's going to push home prices up. Well, I completely disagree with her, but that would be her philosophy. Of course, she's talking her book. But okay, so you get mortgage rates above 10%. You get inflation above 10%. Now, a lot of people are arguing that, well, but Mike, if inflation's at 10%, my house is going to go up 10% a year. Well, inflation went up 10% last year, but houses aren't going up. You see, what's going up is groceries, right? Groceries are going up. Gas is going up. Everything else is going up. Your utility bill's going up. Your home insurance is going up. The expenses to repair your home, that's all going up. But the houses themselves are not going up. Okay, well, that's interesting. So maybe 10% inflation will actually put some pressure on the homeowners, because they won't be able to afford the expenses and they won't have enough money left, and they can't tap that mortgage right now. They can't tap their equity. They can't tap it because they're locked in at that 2.8% on their mortgage. So they don't want to refinance. For the last 10, 14 years, they can just go out, refinance anytime they want. You pull money out and use it as their personal ATM and go out and spend. Well, right now, that's locked up. They can't get that. They could get a HELOC loan, which runs about 10%, which is half of a credit card loan, which runs over 20%. And right now, people are maxing out their credit cards, and some are taking HELOC loans. All right, so those are options, right? But the main option they're going to do is they're going to have to basically end up selling their house if they can't afford it. That's how they're going to unlock their equity. And if they do it quick enough, they'll still have equity to unlock. But right now, over 1 million homes are already underwater with no equity. So these things are changing. But you see, the inflation is a problem. Inflation, it's really a tax, right? Okay, so the administration says we're not going to tax anybody. We're not going to tax anybody that makes over 400,000. We're not going to increase the taxes, except for the people that are rich, right? They're going to increase the taxes on the rich. Well, here's the thing, they're inflating the crap out of everything by printing money. Every time they print a dollar, your dollars go down in value. You see, the ones you have, the ones you earn, they all go down in value. And they're not just printing $1, they're printing trillions and trillions of dollars. In response to COVID, we printed $5 trillion. Now, that was a big mistake. And that inflation is coming through the pipeline. Now, they think they've conquered it. They think they've killed off the first wave of inflation. Well, there's a second wave that's going to come. It's going to be bigger. You're going to see it in 2024. You'll see double-digit inflation numbers. This is just my take. Your take may be completely different. But inflation is a tax. It's stealing your money. They're taxing us like there is no tomorrow. The real tax is about 10%. They go, no, 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 no. It's only 4%. It's only 4% tax. It's not that bad. Janet Yellen will come out and tell you that, well, people are adjusting well to these higher prices. Well, they're stealing your money by printing $5 trillion for COVID, but right now they're just printing like crazy again. All right, we're on a pace right now. The pace we're on is to add $5 trillion to our national debt every year. Every year. We're at 34 trillion right now. This time next year, we're going to be at 40 trillion, and probably the year after that, closer to 50 trillion. Now, this is not a good thing. This is a way of them stealing your money, making your money worth less. Yes, you get a little bit of a raise on your job, and that makes you feel good, right? Feels like you're making money. Yes, the stock market goes up. You're feeling rich, right? You're feeling rich. I am telling you, the stock market next year, my prediction is for the biggest crash of my lifetime. The Moon Boys will tell you that's going straight to the moon, along with their Bitcoin, which is going to hit $1 million probably next week. But anyways, my take is the opposite, right? My take is that you're going to see the biggest crash of our lifetime. Now, the government, they have a choice. They have a choice. You see, they could do the right thing and just cut the government by about 30%, stop spending money. That's not going to happen because they want to stay in power, and people don't want that. You see, here's the thing. You're going to have a lot of fallout, a lot of damage. I mean, the houses are going to collapse. Stock market's going to collapse. You're going to have to rebuild things. There's going to be a rebuild, right? And I hope you young people understand that you want to rebuild better. You want to get rid of the Federal Reserve. You don't, I know that young people, it's really, really interesting to me. They want to go socialism, right? They want to go socialism. They're going to blame all this on capitalism. We don't have capitalism in our country. We have corporatism. We support the corporations. We give them free money for 14 years. We bail them out when they get in trouble. That is not capitalism. That's what got us into this mess. That's why we have 20% of the companies are zombie companies. This is why your house is not worth what you think it is. This is why the housing crash is going to be much worse than what you're expecting. You're thinking, oh, Mike, I can handle a 10% drop. It'll just bounce right back up. No, it's not going to bounce up this time. Yes, they're going to try to print more money. Yes, they're going to throw it at you and try to pump up the housing market. See, that's what they did in 2008. They just printed the money and they blew up the housing market. They blew it up bigger, bigger, bigger. Biggest bubble in the history of the housing ever, in the history of the world. And it's going to pop. It's popping right now. They're trying to keep it propped up. They're trying to make it through another year. Not going to be able to do it. I know next year's an election year, but when you get 10% unemployment, when you get 10% inflation, you get 10% mortgage rates, you've got a big problem. And that problem is the housing market, and that's going to come down. That's all I want to say today. I'm Tall Mike. You might notice I changed the name of the title to no longer stock market gambler. I'm going by Tall Mike Talks now. We'll see how that plays out. I don't talk that much about the stock market. I would talk a lot about real estate. I want to talk more about business. I'm going to try to get out some more videos, maybe put out Tuesday and Thursday videos. We'll see how it plays out. But right now I'm going by the name Tall Mike Talks. Hope you enjoyed it today. If you did, give me the thumbs up. Why not? Punch the subscribe button. Everybody get out there and have a great day. I'm Tall Mike. Bye-bye now.